Welcome to Market Mindset Mondays, where we start your week right with a healthy dose of reality and actionable psychology. Today's topic, overtrading. We explore the psychological trap of always wanting just one more and how that desire derails discipline. Before we get started, I have a question for you. What has been the downfall of most traders, bad trades or greed? How many times have you found yourself in this position? You've had a string of losses and then finally you win a big trade. Just one big trade to turn things around. And as soon as you see that green, what do? You go for one more, only to lose it all back plus more. And today, we want to talk about greed, not the kind that built empires, but the kind that kills accounts. You may have heard the saying, greed is good, popularized by the movie Wall Street, but in the world of trading, greed is anything but. It's the silent killer of trading accounts, whispering lies in the ears of traders, tempting them to take that one more trade, pushing them to chase unrealistic returns. But let me tell you, there's a fine line between calculated risk and reckless abandon. And today, we're here to ensure you don't cross that line. So what is overtrading? Overtrading is the act of taking more trades than one should. But why do traders do this? They fall into the trap of trying to make up for past losses, seeking revenge against the market, or they're simply chasing the high of a winning trade. Whatever the reason, overtrading is a slippery slope that leads to financial ruin and emotional burnout. And I'm gonna tell you how to avoid it. We'll cover 3 points today. Number 1. What is overtrading? Number 2. Spotting the signs of overtrading. And number 3. Mental models to prevent overtrading. So make sure you stick around until the end of the video so you can implement these strategies and become a better trader. Let's dive right in. What is overtrading? Emotion-driven trading is at the heart of overtrading. Imagine being in a casino. The flashing lights, the cacophony of sounds, the magnetic pull of the slot machines. It's a sensory overload designed to keep you engaged, to keep you playing just one more game. And guess what? The odds are stacked against you. Trading without a strategy, without a plan is much like playing on a one-way street. You're going in blind, hoping for the best, but in reality, you're maneuvering through a financial minefield. Every click of the mouse, every trade taken without a clear objective is a gamble. It's a bet on luck, not logic. You're essentially throwing your money away, hoping for a win, but understanding that the house always has an edge. So what sets successful traders apart from those who fall into the overtrading trap? The answer lies in preparation, a strategy, meticulous planning, calculated risks, a disciplined approach. This isn't just about knowledge, it's about transforming that knowledge into a coherent, consistent approach to trading. It's about making each trade count, not just taking as many trades as possible. Remember, quality over quantity. Spotting the signs. Now that we know what overtrading is, let's talk about how to spot the warning signs in ourselves or other traders. Recognizing the problem is the first step towards finding a solution. So what are these red flags? The first one is revenge trading. Think of it like this. You lost a trade, maybe a few, and you feel the urge to make it back on the next one. You find yourself drawn into a cycle of impulsive trading, driven by nothing but the desire to recoup your losses. It's like trying to fill a leaky bucket. For every dollar you put in, to seem to leak out, revenge trading is that leaky bucket. It never ends up filling, and it keeps you trapped in a cycle of loss. Next, we have doubling down. Ever heard of the gambler's fallacy or faulty reasoning? In roulette, red couldn't win next time because it won last time. This is exactly what we mean by doubling down. If you're caught in this loop, you need to stop immediately. It's a losing battle against the market, much like trying to catch a falling knife. You're essentially adding fuel to the fire, intensifying your losses and accelerating your slide into overtrading. Finally, chasing every move. Think of it like being a financial firefighter, always rushing to the scene of the latest price movement, jumping from one trade to another. You're essentially scattering your resources thin. Instead of focusing on one strong signal, you're pulled in multiple directions, diluting your ability to execute on any single trade. You're left exhausted and often out of position. Remember, it's not about the number of trades you take. It's about the quality of your focus and decision-making. Chasing every move is like chasing a mirage. You'll find yourself in the desert of financial uncertainty without a single oasis of profit, mental models to prevent it. Now that we've identified the problem and its symptoms, let's talk about some strategies. 3 mental models to prevent overtrading. Number 1. Position sizing. Picture this. You're standing at the edge of a cliff. The wind is whipping around you, threatening to push you off balance. That's what overtrading feels like. It's a precarious position. To stay grounded, think about position sizing as an anchor. Just as an anchor keeps a ship steady in the storm, it keeps you rooted to your trading strategy. When you size your positions correctly, you're not swayed by the emotional tides of the market. Your focus shifts from the day-to-day fluctuations to the long-term horizon. It's about consistency, not quick wins. Number 2. Trade quotas. Imagine having a daily word count as a writer. You wouldn't write 10,000 words in one sitting, would you? Trade quotas work the same way. By setting a limit on the number of trades you'll take in a given period, you force yourself to be selective. Each trade has to count. Each entry has to be well justified. Suddenly, the market isn't a noisy casino. It's a quiet library where each book, each trade is carefully examined. And number 3, a pre-trade checklist. Think of it as your boarding pass to a flight. You wouldn't board an airplane without one, would you? A pre-trade checklist ensures you have everything you need before you enter a trade. It's your set of guiding stars, keeping you on course even in the stormiest of markets. With a checklist, you eliminate the guesswork. You're less likely to make impulsive decisions driven by fear or greed. Each trade is a deliberate choice based on your strategy and analysis. As we wrap up this Market Mindset Monday, remember, overtrading is a battle that rages within us all. It's the voice of greed whispering sweet nothings in our ears, urging us to push just one more time. But listen closely, the market is a relentless teacher. It doesn't care about your past losses, your need to recoup, or your desire for quick wins. It responds only to logic, strategy, and unwavering discipline. Stay grounded, stay focused, stay in control. Take charge of your trading journey today, and join us next Monday for another Market Mindset Monday. Until then, trade safe and trade smart.